Guys, in the past 6 trading days, we have seen the single largest move on the yen and on the CHF in all 2019. All right, so I'm going to be breaking down exactly what is happening in these markets and what seems to be one of the biggest opportunities I have seen in quite some time. All right, let's roll the intro. All right, traders, what's up, guys? Welcome back to the Top Trader channel. It's your head trader here, Cleveland Bishop. All right, we're going to be breaking down again the CHF and the Japanese yen in today's markets. But if you guys are new to the channel, here on the Top Trader channel, we like to discuss everything revolving the fundamentals. Okay, so there's a lot of folks that teach technicals. Here we go deep into fundamentals because the more we understand what's actually driving these markets from a macro perspective, the more we're going to be able to take advantage of these price movements, right? It makes a lot of sense. So again, if you guys want to learn a little bit more about fundamentals, make sure you guys subscribe. And if you like the video for your boy, I very much appreciate it. All right, so wow, what has just happened? We have not seen a price move as large as these two. And the interesting thing is they're also correlated, right? So why is the Japanese yen and the CHF correlated? Well, if we pull back and ask ourselves what happened last week, we're starting to get more results and more information regarding the trade war, right? So what did Trump mention? Trump mentioned that he's now about to implement more tariffs onto more countries, so on and so forth. And this is creating an environment in the overall global economy, right, in a more riskier sense. And when there is more risk, certain asset classes, right, certain currencies start to get higher valuations. And we're going to go into a little bit deeper as to why that is the case as well. All right, so here I want to show you guys real quick what we're looking like right now on the Japanese yen, just to give you guys a little bit of context. Okay, so if we pull over here and I take a look here at the Japanese yen index, what the heck is going on, right? So if I pull all the way back out, you guys can see this is the daily chart. Here on the Japanese index, we have just broken the all-time high, right, for 2019 for the JPY. Very, very interesting stuff. And most of this buy-side movement that you see here happening on the Japanese yen is all because of, not because Japan's economy is performing better, okay? It's happening because more and more riskier things are going on in the overall global economy. We have moves that are happening in the Japanese yen because of Brexit. We have moves that are happening in the Japanese yen right now because of, again, the trade war, okay? Because of interest rates. We're cutting interest rates in the United States. That had to do with this massive buy-side movement here as well. So now the thing is, it's like, okay, Cleveland, I'm seeing a massive move. What am I doing, right? Some of you guys are thinking, when's going to be a good time for me to get back into that move? Or some of you guys are saying, hey, can I maybe catch what? A pullback. We're pullback specialists, right? Everyone inside of our Top Trader Academy, they're learning our core pullback strategy, right? And so here, that's what we're really waiting on. First, we have to analyze this move though. First, we have to assess and truly understand, hey, can this move sustain? Because if it can, then maybe we're not going to be ready for a pullback quite yet. So if I zoom in a bit, you guys can see exactly where the market started to launch, which is obviously around this structural area. And we broke higher. It hasn't been a lot of days. This is 1, 2, 3 days of price action, and today we did get our first pullback. Now, we didn't get that pullback, right? We don't know when the market's going to make that immediate, just small sell-off, right? We're looking for that overarching, larger themed pullback, which is going to hopefully bring markets back down to what price level? If I show you guys over here real quick, we want to see markets run probably back down to the structure at which it broke out of. All right, so that's one of the first trades that we're going to be looking for. Is this going to happen? Again, we need to know what is going to happen in regards to tariffs. We need to know what's going to happen in regards to Brexit and some of the other larger stipulations. Again, this price move here is more oriented towards tariffs. So that is the pressing catalyst right now that we're currently assessing. The more information we get on that, the more we're going to be able to dictate at a higher capacity what we need to be doing right here for the Japanese yen. Now, again, it's amazing how these currencies are correlated to such a high extent. Let me show you what's happening on the CHF, and then we'll actually get into a currency pair that we're actually going to play this on. So you guys can also see here we have rankings for the weakest and the strongest pairs of the day, which is also pretty cool. It just gives us a good gauge as to what's happening. Again, if you guys want different accesses to like cool little hacks that we have here on Thinkorswim or a full blown out course on fundamentals, get inside of the Top Trader Academy. I cannot stress that enough. It's going to be super awesome for anybody that's starting out. All right. So here again, CHF, same thing. Notice we get this massive buy side price move here on the CHF, and notice we're starting to hang around those highs a bit. Now, are we going to be able to immediately catch the high sell off? No, okay, we're not genies, but what we can do is we can say to ourselves, hey, if the market is just showing us a little sign of a pullback, maybe we can elaborate on that, right? Maybe we can really get a good grab on that actual move itself. And this is what everyone inside, again, our academy, this is what we pride ourselves on doing, catching these type of trading opportunities. And we see these opportunities everywhere, right? Usually we have a monitor out there inside of the bigger office with like 50 currency pairs. So we can constantly assess, right, where these pullbacks are showing themselves. And so here, same thing, CHF, 4 or 5 days of a run to the upside, all because this is a currency more oriented toward risk on, right? When there's more risk in the economy, you see more capital flow to the Japanese yen. Why is that the case? Japanese yen has a negative interest rate. Literally, if you have a bank account in Japan and you put your money in your savings account, like here in the US, right, how you get maybe 1% interest a year, well, in Japan, you're getting a negative 1% interest. They're taking money out of your bank account because they want you to use that money for economic growth, right? Isn't that interesting? So it's insane how they literally say, hey, look, guys, our economy's not doing so hot. We don't want you just storing cash and piling it up in yen, okay? Can you guys put this cash flow elsewhere? Put some in Europe, invest in the States, maybe invest in a business here in Japan, take that yen and then push it back out. We need to have more what's called monetary velocity. But what happens when crazy shit with tariffs start going on? Some of those Japanese investors are saying to themselves, hey, look, if I have a few extra dollars in, let's say pound, if I have a few extra euro, the risk of the euro and the pound collapsing entirely is a lot worse than me having a negative 1% interest rate. So they pour all that capital back over to the Japanese yen. Okay, if you can understand and catch these type of fundamental moves, these are the single largest currency moves that are happening in markets, these risk on, risk off sentiments. And there's other large currency moves and catalysts that can drive markets as well. But this is why understanding the fundamentals and being very, very tuned in is so, so important. Okay, so yes, that is a massive opportunity. And that is exactly why the yen has this type of expansionary regime whenever anything happens from a risk on perspective. Risk off, what happens? Money flows back out. If everything's looking good, if the economies outside of Japan are running well, the Japanese investors, they push their money back out of the economy, of the Japanese economy, and start investing elsewhere. So, same thing here actually happens with the CHF. CHF can be a little bit expensive for people in Switzerland. It's pretty pricey. Shit there is pricey. So when you push your money out of Switzerland, you get a little bit more bang for your buck. Okay, so there you go. Now, right here, same scenario. If we see that there's a little bit of an opportunity to catch basically a flip, right? If Trump starts to become a little bit less confident in his idea as to what he wants to do with tariffs, we will see that express itself right here in this CHF. All right, and so the same thing is happening here where, again, if we can just calculate that we get a nice little pullback, then we can start to have some type of trading opportunity. Now, if we don't get that pullback and we have different entry rules and ways to get inside of all these moves, we don't just hop in. It's not as simple as saying, hey, the market slowed down, maybe we can now catch a pullback. You will get decimated, okay? You have to have a methodical process to get in these moves. And we have basically 4 criteria that we look for that, again, that's for Academy members only, but we're just helping you guys understand the methodology around that, all right? So now, what currency pair can we play this with, right? We want to be playing all this weakness with a pair that obviously gives us an opportunity to catch what? Some strength, okay? And so that's why we're looking for something that has a little bit more of an opportunity for upside, but so much is going on. Now let's take a look at the New Zealand dollar and the Australian dollar and all of this mess, right? We know that them and China have a massive, whoa, who's the biggest trading partner with China? Australia, right? What do you see happening right now? Selling off, everything's correlated. All of the capital flow that was inside of the Australian currency is where? Tell me where it's going. It's going to the yen and it's going to the CHF. Show you the same thing with New Zealand. Australia, New Zealand, they're heavily involved in trade together. Boom. Okay, you're getting massive sell-off again. So you literally see billions and billions and billions and probably trillions at this point of dollars flowing out of these economies and going into the other economies. this is the most playable thing that I have ever seen in my entire life, right? And we have been able to catch a lot of massive moves here inside of our organization. And we just want to show you guys, just to give you guys a big picture view, that if you guys are not knowledgeable in this game, when it comes to how to capitalize on this stuff, you are missing out on some of the largest moves that are in the FX business and really in the asset business. You know, stocks are doing well. Options are always something that are doing amazing in regards to catching different scenarios where you're running out of time, decay, and all that stuff. But when it comes to consistent thesis, like a consistent theme across how to execute in an asset class, Forex is very consistent because it takes so much money to move these markets. You can come with a general idea and say, hey, if that idea is not playing out, pull back. If it is, then yeah, let's maybe entertain some trading opportunities here. Okay, so again, same thing. Maybe if we get a switching, if we get a little bit of a different run in regards to this tariff regime, maybe we get a pull back to the upside for the Nzdusd. So just to pull back to you guys, that's what I want to see. I want to see basically this Nzdusd maybe push a little bit back to the upside. Maybe they've overreacted in a sense to what just happened in regards to tariffs last week. And if there was any sense of that overreaction playing out here, we might have ourselves an awesome opportunity. So what that looks like for us is we could do something along the lines of taking the New Zealand dollar and taking the Japanese yen. And then we could simply just buy this currency here. We can buy the Nzdusd CHF. If you don't want to really mess around with the Japanese yen or the CHF, but you really like the Nzdusd or you really like the Aussie, then we can take a look at buying the, we can head over to the Nzdusd USD, because USD is looking pretty crazy, man. The US dollar just broke the all-time high of 2019, okay? So right now, again, Nzdusd USD looks pretty good. Maybe you can buy at this support level here. Again, we're gonna give out specific entries, exits, and stops inside of the academy, but at least you guys have, again, a general idea as to what the F is going on inside of these general currencies here. So Nzdusd USD looks pretty good. And again, so you wanna come with a thesis, you wanna come with a hypothesis and basically say to yourself, why is this going to happen, right? If this market is going to buy, why is this market going to buy? And then just study that hypothesis. Draw that thing up somewhere on your desktop or whatever it is. I like to write things out, so don't type it up on your computer. Write it out so you can see it. Have that thesis there for you and make that your trade. Here's an example. Okay, let's say we go back to 2008. And in 2008, what was happening? Recession and all that kind of stuff, right? But if you guys watch The Big Short, they had a thesis. They had a general idea that they were super focused on in regards to a trading opportunity. This is why technical analysis is bullshit to me personally, all right? If you think about it, you can have a pattern form just spontaneously on any time frame, right? There could be a 1 minute time frame where a flag pattern just randomly formulates, right? There can be a 5 minute time frame where we just randomly start to get some type of M&W pattern. All this bullshit just can randomly pop up and go away just based off of the market's overall just mechanical structure of it moving up and down. That's not enough for me to put my money at risk, right? I know a lot of you guys are dealing with portfolios lower than $10,000, but when you're dealing with portfolios at $10,000, $50,000, $100,000, $250,000 portfolios, you don't want to put your money at risk on just a simple little cute pattern that you see. You drew up a line on it. That's not what I want to do. I want to put my money at risk in a scenario where I can say, okay, Donald Trump just said this. If Donald Trump just said this and we just had an increase in that asset by 5%, and that scenario turns out to be false, what's going to happen? We're going to have a pullback, right? Or if Donald Trump says this and says, hey, Donald Trump mentions that he wants to have higher oil prices, right? Well, if then other countries start to go along with that trend, right? There's thing happening right now with Iran where a lot of the different economies are not doing business with Iran anymore, strictly just based off of Donald Trump not doing business with Iran anymore. So there can be trends that can start to be set in some other aspects, right? In any aspect that happens where there is capital flow, well, yeah, dude, I want to get involved in that game. And so if Donald Trump says something about how he wants to see an increase in oil prices or a decrease, let's say he wants to see a decrease, and he wants to start to implement some type of scenario where he wants to start oversupplying the market and just funding all of the oil companies inside of the US with more and more capital, and for some reason Russia catches on with that, and for some reason OPEC puts out some type of statement where they also want to do more supply, what's going to happen, folks? We're going to get an increase in supply to a very dramatic degree, right? So again, we want to know why we are making these decisions when it comes to these trades. 90%, maybe not of you guys, because you guys are here on the Top Trader channel watching this stuff and entertained by things happening from a fundamental perspective and using these fundamentals to your trading. Perfect. But there's a lot of people, 90% of the retail market, they're not paying any attention to factual, knowledgeable reasons why the market is moving. And this is why 90% of retail is not making money. Okay, every firm that I've ever worked at in my life, they all had fundamental basis of how they did their entire trading methodology. Okay, everybody. So again, it's going to be very important for you guys if you want to take this seriously and start to scale at a higher capacity to make sure that you have dived all the way in on the fundamental tip. And I wanted to express that to a higher degree because a lot of you guys are on the fence. Whether you're like, hey, I'm kind of taking a look at fundamentals, I'm looking at an economic calendar. That is not what I'm talking about. I want you to fully indoctrinate yourself into the belief that, hey, if I understand fundamentals at a higher capacity, I'm going to be a more knowledgeable investor and I'm going to be able to take action and decisions at a higher capacity than I ever could have because I know what is happening and what is going on with these markets. It's foolproof nearly. Okay, so guys, let's keep an eye out. Let's seriously keep an eye out because these are some massive opportunities here, and you guys can massively benefit if you take fundamentals serious and take your trading serious. Give us some questions in the comment section below. What are your thoughts on these markets? What's happening with tariffs? What's happening with all four of these pairs, NZD, Aussie, CHF, and Japanese yen? Here real quick, I'll show you guys just very quickly what we're looking like on the US dollar. You guys can see we did break the all-time high in 2019 for the USD, and we're now reverberating around that high right now, right? So give me some feedback on everything you guys see here. If you guys want to schedule a call with some of my senior traders and talk a little bit more about the Academy, get and see a little bit more interest, only if you're serious. There's a lot of people, we're getting probably over 50 calls a day about the Academy, but a lot of you guys aren't serious. We only want to work with people that are truly wanting to make this a real thesis or a real business model that they can actually scale into. So if you guys are super serious about it, then go ahead and schedule a call. The link is in the bio. We're going to be pushing out some more content centered around this idea here in regards to these currency pairs and some more tips and tricks for you guys as well. All right, so folks, trade safe. I'll talk to you guys soon.